Usually it's meme coins that go up and down violently in price, but JellyJelly is a serious project which doesn't have serious price discovery though. In this video we are going to look at the on-chain data because it is the fourth largest trending token on the Solana chain. It's got 5.3 million worth of liquidity. It's up 22% today, and every now and then the price is going up and down very violently. The question is why? Can we potentially time this market? Let's have a look at the data most people aren't considering. Jelly My Jelly has been launched on pump.fun, so that's actually a meme coin launchpad on Solana. It's the seventh largest token with a market cap of only 62 million. Number one is Fartcoin, which is roughly 5 times the size. There has been a lot of drama around the JellyJelly token. The token was listed on Hyperliquid, which is the largest decentralized perpetual futures exchange. So people were able to bet on the price, on rising prices and on falling prices with leverage. But then the token got manipulated. The manipulation was so bad that Hyperliquid was forced to unlist JellyJelly. It's something that usually does not happen. That was a story everybody was talking about half a year ago. The market maker of Hyperliquid lost money with JellyJelly. That was this drop over here. Up to this point, we only saw the market maker generating profit. But JellyJelly changed the way the platform did its risk management. Now tokens get delisted much quicker. This massive jump in profit, by the way, that we see over here, that was the flash crash. When the altcoins crashed on the 10th of October by 48%, then market makers bought the bottom and now they're gradually selling off. The token is listed on Solana, so most of the liquidity is bound directly to the Solana price. So what we see over here is JellyJelly relative to Solana. So how is money flowing out and into the token? We seem to be in a somewhat constant trading range with the recent rally. We have hit the initial pricing, and it will be interesting to see how this develops long term, because on chain we've got almost 30,000 holders, and in the last few days we have seen a lot of new token transactions, also a lot of new first-time traders, and of course recurring traders as well. Here's the trading volume on the Solana chain. Most of it now happens with small retail wallets, so wallets that have less than $1,000 worth of JellyJelly. Now this outperformance is not caused by so many new people getting into the token. Because have a look at this. On the left side, we see the number of wallets with at least 15,000 JellyJelly tokens. At the current price, that's roughly $1,000 worth of the token. In the middle, it's $10,000 worth of the token. On the right, it's $100,000 worth of the token. None of the wallet cohorts go up in numbers. There is a bit of a stabilization in the last month, so the selling isn't as continuous anymore. But really, the vast majority of the token supply is still held by the whales. So by the wallets that have at least $100,000 worth of the token. 55% of the supply is in the whale hands. 24% of the supply is held by wallets that have $10,000 to $100,000 worth of the token. So if you're holding less than $10,000, you're not part of the 80% that currently move the price. And it is clearly not just the spot market that's moving JellyJelly, right? That's why we had all of this trading of the massive spikes in the perpetual futures. That's what this drama was all about, the Hyperliquid unlisting. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. In the last 24 hours, we only saw 13 million worth of trading volume on Radium directly. So that's spot trading volume. Compare this with the perpetual futures. Here we have more than 400 million worth of trading volume. So really, it's the perp market that currently moves the price. The vast majority of traders are betting on rising prices. So the funding rate is positive. There's a strong correlation between the open interest, so the amounts of bets on JellyJelly, and the price. And just have a look at how much open interest there is. It's currently at 84 million, and that's more than the entire market cap. So there's still a way to exploit the market here, right? Every dollar that we put in the spot market into an asset increases the market cap by more than $1. So if we now buy up JellyJelly with say $1 million on Radium, the market cap will increase by more than $1 million, and thus we can liquidate the longs, we can liquidate the shorts at our liking. Of course, quite a bit of capital is required to do that game. And Binance and OKX probably hold a lot of the supply now, so they've got an impact on the price. But in theory, since the market cap is still so small, and since most spot trading volume happens directly on chain, it is a potential strategy. My impression is, of course, that Binance is a bit smarter than Hyperliquid at the time, and they've got the proper risk management in place. Or maybe they simply just have the deeper pockets and they might increase volatility further if such manipulation is detected. I'm not a fan of touching the token at all. I don't think there's nothing natural here. This is just a player versus player game among the whales, among the people with a lot of leverage. And really, we don't have any edge in this market. It's better to look for tokens that have more consistent selling pressure, that have more consistent trends, and to stay away from things that can double in an hour to then afterwards crash again by 50%, that shake violently in both directions, just to benefit the market makers. That's what's happening with JellyJelly. Now, isn't it fascinating how for most altcoins, the movements to the upside tend to be much faster compared to the movements to the downside. We shoot up and then over a long time, we trickle down. Here's the example of Dogecoin relative to the others market cap. So when there's news, when there's a lot of attention, the Dogecoin price shoots up within 1 or 2 days to then come back down over several months. We're seeing the same for the Trump token. We shoot up, this was the announcement of the dinner, and then subsequently we come back down. There is a difference though between Dogecoin and the Trump token once we zoom out. So again, this is Trump relative to the others market cap. So the market cap of all of these smaller altcoins, and here is Dogecoin relative to the others market cap. So while we do have our pump and dumps in both cryptocurrencies, the long-term trend is very different, as in Dogecoin just goes with the overall market. It simply just trades in a somewhat constant range, while Trump tends to long-term underperform. And there is a fundamental reason why Trump underperforms long-term, and that is tokenomics. It's new tokens that hit the market over time. Have a look at the following data. This is the number of Trump tokens that get released over time. We started off with 200 million. Now we are at 363 million. So it's the early investors, it's the team, etc. that cashes out over time. And that selling pressure, those vesting unlocks, that dumping on retail, that's what's creating the long-term underperformance. Now, some people say that markets are efficient and that everything is already priced in, but I don't think those charts show that. There is inefficiency, and we can simply turn this around. Let's say we've got Bitcoin relative to the Trump token. Then we're getting this chart here. So since Trump launched, Bitcoin outperformed the Trump token by 560%. This is how I believe we can make money in crypto. It's not trying to find the one outperformer among all those altcoins that always go down. It's doing the exact opposite. It's trying to be allocated in a way that we make money when the insiders and the early investors make money as well. When they are dumping on the average retail investor, we make money because things like Trump tend to underperform long term. As long as the token dilution continues, as long as new tokens hit the market, this chart is very likely going to go up. I'm making money with that strategy already for 4 years. This is a monthly chart. Had I just dollar cost average into Bitcoin, I would have gotten the return here in light gray. Instead, I got the return in black because I also bet on falling prices of various altcoins. It is a mistake just looking at US dollar charts. Really what matters is your portfolio value measured in Bitcoin appreciating over time? If the answer is yes, you're probably doing something right. If the answer is no, then you might just stick with Bitcoin and dollar cost average into Bitcoin and stay away from altcoins altogether. The Trump meme coin is just one out of many examples. Most altcoins have an increasing supply, and so here with Balancer relative to Bitcoin, so we go long Bitcoin, we bet on falling prices of Balancer, we can get this long-term chart. The strategy looks quite straightforward. There are a few caveats though. So for example, here with the Bitcoin to Balancer chart, we do have a lot of volatility along the way. Where does this volatility come from? It comes from small market caps. There is some token manipulation. There is some short squeezing happening along the way. And the smaller the market cap is, the more volatility we invite. So while the strategy is long-term profitable, we have to be aware of the potential pitfalls as well. And so I made dedicated videos on the topic. How can we actually make money from those inflating altcoins? Most altcoins do poorly and we don't have to find the needle in the haystack. The one altcoin that does well, we can just bet on the haystack continuing to go down because, again, the early investors, the VCs, they cash out and they dump on the retail investor. There are two important videos to watch: using perpetual futures on hyperliquid and risk management with relative valuation bets. It's half an hour each, so in total 1 hour of content. And after you've watched that, you know what to do in order to set up positions like this. Now, this here is currently my favorite trade. So this is the position that I will recommend to you once you have joined the premium membership. So you watch those two videos, you join the community. Afterwards, I will send you what to do in order to set up this trade. If you don't make money with that trade after holding it for 1 month, then I'll refund you your membership fee. I'm that confident in the strategy that you can simply just open that position, and if you're in the red, I don't want your money. The fee, by the way, is $125 per month. Again, if you don't make money with that trade, I will refund that. But of course, it's a monthly fee. So I share all of my trades in real time with the premium members. So for example, over here, this is where I closed a short position on the movement token. Move was also highly inflationary. We opened this over here where we were at the upper end of the trading range on a relative valuation chart. So we always look at the altcoin relative to the rest of the market. And then when we make quick gains, when we get closer to the lower end, we might also take some profit and wait until we go back again to the upper end of the trading range. I know at the beginning this strategy can be a bit daunting, but again, there is support in the different chats. There's also moderators that can help with any questions you might have. So feel free to check it out. The link is directly over here. Just click on the screen. It will lead you to the premium website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.